Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, January 21st, 2010. Well, here we sit, folks. The markets are down significantly again today. The Dow is down 206 points, the Nasdaq down 23, and the S&P 500 down 20 on the day. That's basically 1.75% drop across the board as this market is getting pummeled for the second day in a row. Now, the key again is on the charts. The charts really dictated what happens, but it's amazing how if you look at what the news is coming out, you can kind of see how everything all flows together. The charts tell you one thing, the news confirms it, causing the rip to the downside. Now, what do I mean by that? Well, we had Goldman Sachs coming out with earnings this morning, folks, and they blew earnings away. I mean, just absolutely astonishing. They beat by $3. They were expecting to report $5.20 profits. They reported $8.20 profits with about the same in revenue in regards to what expectations were. So they just made revenue numbers, but the key was, and this is what to me was a shocking thing, is that 2/3 of that revenue number was due purely to trading. Well, what does purely to trading mean? It means their trading desk, where they basically trade the markets, made over $6 billion last quarter. Now, what is that, positive or negative, or how does that shape up? Well, considering they're a bank, that's scary. Why is it scary? Because what happens when something goes wrong? All right, how do they, compensate? If their core business, which is banking, let's say, is not making the majority of their money, what if they make a couple bad trades? Well, are they Goldman Sachs? Are they going to make a couple bad trades? Probably not, because you can kind of say that they are somewhat involved with the government, and they have trading programs and flash trading programs and all that stuff to kind of make sure they're on the right side of the trade. But the scary thing about it, and I wrote an interesting article, you can see it on the article archives at InTheMoneyStocks.com, is that you look at this situation, folks, and clear as a bell, it's pure and simple big money taking advantage of small money and taking small money's money. So essentially, the amateur trader, amateur investor out there is getting taken advantage of by the bigger players out there, and thus they're reaping the rewards. So all your earnings, if you're a small trader and you got caught on many different calls, well, guess who has your profits now? Now, the interesting thing about it was, initially the markets opened flat to positive this morning after the big drop yesterday. However, Obama comes out midday or a little bit before midday and starts talking about how they're going to start regulating the risk level that these banks are allowed to take. All right, in other words, they're not allowed to have hedge fund connections. They're not allowed to take excessive risk. All of a sudden, Goldman Sachs starts to tank. Why? Because 2/3 of their profits are made this way. So all of a sudden, Goldman Sachs begins to get clobbered, and I'll show you the chart on this. Let's bring up Goldman Sachs' chart. Down $9 on the day after earnings that beat by $3. All right, they beat something by something like 60% on earnings, 60% beat on earnings. And again, they're down $9 today, not because the earnings were bad, but because it's the way they made the earnings and then ultimately what Obama is proposing. Now, why is Obama proposing this all of a sudden? Well, we all know about the Republican Brown that won the Senate seat in Massachusetts. That was a wake-up call to the Democrats, folks, and Obama. All of a sudden, you see a revolt going on against the Democrats based on the fact that Obama has been so Wall Street friendly, thus Wall Street's up 80%, but is the average person out there finding any new jobs? The answer is no. Unemployment continues to be neutral to positive and rising over the last multi-month period. So you can see Wall Street and Main Street have been on two separate courses, and ultimately the Democrats, with this Senate seat, paid the price. All of a sudden, the wake-up call, the bell goes off to Obama. He comes out today and says, listen, I got to show these people, I got to show the American people that I'm going to crack down on these banks and not let them do what they're doing and take advantage of the small individual trader, et cetera, et cetera. And again, that's why we're here, folks. In the Money Stocks is here to tell you what the truth is, avoid the nonsense hype, and give you guys the lowdown. Now, talking about charts, let's go back to the SPY. Huge volume today, 240 million already. We're on pace to do about 300 million on the SPY. That would be the biggest volume of the new year and probably the biggest volume in about 2 months, believe it or not. Now, what does this all mean? Well, I'll show you the 60-minute chart. There's a lot of key levels that we talked about to our premium subscribers. And by the way, folks, the premium subscribers had their best day ever at In The Money Stocks profit-wise today. We nailed this, knocked it out of the park. And again, if you're not a member now, you're just insane, flat out. All right, bottom line, you have to understand the levels. You have to understand the calls that went out. Now, going back to the 11th right here, and I talked about this, I believe, over the last couple of days, I called the high was in the market. I said, guys, I believe this gap up right here, when it happened, I said, on that day in the video to the premium subscribers, to the chat room, I said the high is in this market. Sure enough, we fell. Then we rallied back. People doubted. Then we fell again. Then we rallied back. People doubted again. Then you fell down, created a beautiful MA pattern, which I called out last night to our premium subscribers. I said, guys, MA pattern in the works here. Look at this. Down we go. Huge drop. MA pattern completes, you're almost to the target, essentially to the target down here. What would the target be? It would be this trend line right here, this yellow trend line at 111.40. Why? Because if you go back to the 31st of the year, let me scan back right here. All right, whoops, scan back a little bit more. See this yellow trend line? That's that yellow trend line. This is the drop on the 31st of the year, the last trading day of 2009, where we dumped into the close. That's that low. That's gap fill, folks. Gap fill is where the target will be. We've basically almost got there. You can see we're coming down a little bit more. But again, MA pattern, biggest trading profit day for subscribers at In the Money Stocks ever today. People, again, emailing us testimonials that you would think are so outlandish just because they're so positive. I made the most money I've ever made. Best day ever. You name it. It's there for the taking, folks. And here's the charts to prove it. M pattern. We talked about this A pattern formation. I said it would probably go to this 20 moving average or the 50 moving average. It went pierced the 50. We shorted up there at the high of the day in the intraday stock chat as well. People picked up the SDS. People picked up QID when we were at the highs there. And the rollover paid off handsomely. You name it. It was there for the taking. So that's where we're stand right now. Unbelievable day today on the short side. If you were short, if you knew this market was going to roll over, if you recognize the MA pattern, if you recognize the top was in this market, I've covered even a little bit of my swing trade shorts, and I've told my premium subscribers to do the same on some of their small positions. There's expected to be a little more downside in this market, but maybe you'll get a bounce tomorrow or a pause day after this really big drop across the board. So keep an eye on what the charts are showing you because it will tell you everything. Now let's go back to the intraday charts. Again, you can see this market starting to roll back towards the lows of the day. I do expect a possibility of 111.40 to 45 to get hit today. We almost got there down here. We came within about 10-15 cents of gap fill on that chart. That's really what you're looking for support. If we come down and hit that later today, I'll probably look to take a little scalp long or maybe on a pierce of that level so I get it a little cheaper. I'll have to decide as things play out. In any case, again, watch this market. Again, the Obama effect is in full swing today. First time he came on TV in probably his whole administration since he's been in office that the market actually sold on it. And that was surprising, folks. The banks are not going to be happy about this. Trust me on that one. But at the same time, it's the risk of losing all the American support. And he's got a second term to worry about at this point, along with all his other, Democratic friends who want re-election. So there's a lot of issues going on here that they have to be paid attention to. And you're seeing that right now starting to play out on Wall Street in a negative way. All right, and again, the charts told you this was going to happen. The MA pattern was a beautiful MA going into yesterday. You needed the down move to complete the A. That did happen, again, in the day session. Now, a couple things to go over. Keep in mind, webinar this Saturday, folks. This is how we do these calls. A lot of this information will be revealed in that. All the proprietary information we utilize on counts and everything is in that webinar this Saturday. If you refer a friend, you each get $50 off that webinar. It's an unbelievable deal. In addition, keep in mind, come join the chat room. Best profit day in the chat room. Best profit day in the research center. The profits are flowing like crazy today. We encourage to see you along. We'll see you soon, folks. Enjoy the profits. Enjoy your Thursday, and we'll talk to you tomorrow. Take care.